September is a very big month for markets. Whether you trade the indices or gold or currencies, this month is huge because we get a lot from the Federal Reserve.
Looks like the Federal Reserve is having a 100% off sale!
We get some NFP data at the end of this week, and we already see some volatility, which is to be expected with seasonality actually being negative for the month of September. September is historically a pretty bad month for stock indices. We're going to dive more into that in just a moment. But before I do, I just wanted to give you guys a bit of a rundown here on what we're seeing. We've got the NASDAQ down 2.4% at the time of recording, 1.6 for the S&P. The Dow's down 1.14. You got the Russell down. Dollar index is slightly higher. The VIX is up 19%. And suddenly it looks like, you're getting that seasonality coming right into play. Take a look at oil, down 4.85% at the time of recording. This is actually crazy to see oil taking out those lows right around 73, which have been a stronghold for the bulls going back for much of this entire year. February, we saw a big rally from there, June, and now, with the breakthrough here, I'll be very curious to see how the candle closes here on oil. I also wanted to briefly mention as we get started today, our video sponsor, Vantage. If you're somebody outside of the US and you're looking to trade CFDs with great commissions and a very wide list of different assets that you can trade everything from cryptocurrencies to indices, commodities, currency pairs, all under one broker, and they offer a really generous deposit bonus to subscribers who use the link down below in the description. Now back to the video. So with oil crashing through the lows and even gold having a bit of a sell-off today, what is next for markets? Well, I wanted to go back to this theme that I started with briefly, which is the seasonality concept. Now, if you don't know what seasonality is, all it is saying month to month, show me the historical tendencies of how assets perform over time. And what we see here is that we've got selected the S&P 500, which is something that I personally watch and trade a lot. And what we can see is that there are periods of the year which are historically very positive, and there are periods which are not so hot or not so impressive, and perhaps even in this month of September, a negative expectancy, which remember that over the very long term, stocks and gold, they typically do tend to go up. But there are certainly volatile months in between, and us as traders could potentially take advantage of this information. So I want to kind of direct your attention to this minus 1.10% historical performance average that we're seeing here. What that's telling you is that during this month, we may have months where, things are good, things are bad. If we're taking a look at every year, the point is the overall average, if we were to represent the red line here as the average is a performance of minus 1.10% for the S&P 500 during the month of September. Again, that doesn't mean you can't have a positive month, but based on the starting point that we've seen in the first day here, it does seem like there's perhaps a little bit of selling energy coming into the chart. We do see, again, S&P 500 wiping out a couple days of gains in just one single New York session morning period, which is, pretty aggressive. And I'll give you my update on this before we talk about other things like the dollar and gold, etc. My thought on the indices is I am still bullish on these things. However, I'm not married to the position. I'm a trader. I'm here in and out of this, kind of opportunity where I can find it. And if we see a break of structure here, if we can't hold this 55.60 level, which very well may not hold by the time you guys watch this video, if we break through those lows, then that's going to be my signal to take profits on the position that I started during all of the craziness in August. So August ended up being a very interesting month for me because I was early to some of the entries, and then this last entry became a really nice winner for me. And I bought things like the S&P 500, SPY was the symbol that I traded, and some other names as well that I've talked about on the channel. So if we break through support, it is time for me to take profits on this position. And speaking of other positions that I've got, I want to talk a little bit about gold. So gold is another trade that I took in the sell-off that we saw Thursday, August 22nd, came down to this level of support, and I went long here. And this one has really, been an interesting one to watch. We shot right back up to those areas, and now we've actually drifted back down to my entry point. And so we're back at break even or just a little bit above it, which admittedly is a bit frustrating to watch. Nobody wants to, sit around and watch a trade just go into profit, then come all the way back. And, that can be a little bit frustrating, but it is the price that I pay to be a swing trader. Sometimes you're in positions and they're just, moving higher for weeks on end, and that's a great feeling. And sometimes you have positions like this where you get a great entry, it shoots up, comes back down. But I'll tell you where I'm at with this. I am still bullish on gold. I still like the upside for gold. And most importantly, what will tell me that I'm wrong about gold is if we break this level around 24.65, right around this area. So if we break this level of support here, then that's going to be my cue to go ahead and take a loss on this one. And this is going to be a very small loss. I actually had a bigger initial stop loss, but decided to trim it once we got this big violent reaction. I went ahead and just trimmed my stop loss and decided not to put it in profit. Obviously, in hindsight, I shoulda, coulda, woulda just closed out my position there. But hindsight does you no good in trading. We've got to trade into the future. And so for me, what I was looking for was a higher low. I was looking to see if we could actually take out and close above those highs. Didn't quite get that. So today, what I'm looking for is whether or not I'm going to be able to hold on to this trade. If we break through lows, time to take a quick loss. And if we can bounce nicely, then I'll look for a chance again, if we can take out the highs, to trail a stop loss further into profit. So that is my update on gold. I'm still long, just kind of waiting to see if it wants to make a move. It's got to be decisive. If we break through resistance here, then we may very well be headed lower. If we break this level, then it's possible we see a move down to, this zone of support here. And if that level breaks, you could make a slide down to 2360. It's not out of the question by any means. I mean, think about, you've been having some really explosive upward moves. So it's been a really big winning year for gold. So if we do see price break support, it would be natural to give back some of these crazy good gains that we've had. Guys, you got to remember, this is like the start of 2024. Look at how much we've gone up on gold. So it's been a really rock star year for the bulls. So it's very appropriate that if we start breaking through levels of structure, I'm just going to kind of watch from the sidelines, maybe wait for a bigger pullback, and then maybe get an opportunity to get long again. That being said, I don't have any interest in shorting this at this time. If I take a look at the top setups algorithm on the Edge Finder, you can see gold is no longer on there. I've excluded neutral readings, and when I add them back, you can see gold is on the list. So where is gold? It's somewhere on here, so I can't find it with my eyes. Hold on. If I just go metals, there's gold. Gold's getting a neutral rating, which, by the way, if you don't have the Edge Finder, quick shout out. If you guys would like to try it for 30 days, we do offer a paid trial. This is a trial that you pay, an amount of money for, and that deposit money goes towards your final purchase. If you'd like some information, you can apply for that down below in the description to get 30 days access to the Edge Finder to try it out. So with some of the current setups here on the Edge Finder, you can actually see it's pretty light. Usually there's a lot more setups being formed, but we've really seen some stuff shift, and with the seasonality shifting here, some of that has fallen off a little bit. So I'm watching some of these charts. NZD USD was one that I did have a look at on live stream today. So possibly some long setups on NZD USD. I'd like to see this thing pull back down to the 38.2% retracement. I do like that setup. So I think that could be something to watch out for this week if we do get a bigger slide. Because again, the big things that we need to watch out for this week are today's manufacturing PMI numbers, which came in just about as expected. And then we have on Wednesday, we have the JOLTS job openings, which is big for anybody watching the USD pairs. And then we have ADP non-farm employment change, which is the private sector reporting on Thursday. So we'll get some insights on jobs. We also have one that I think is one of the more important ones this week, which is the services PMI. Remember that the U.S. economy is greatly weighted towards services. We're a service-based economy. And so, services PMI comes out on Thursday, which will be a very important thing to see where the economy is at. And then finally, the big one on Friday, which is the jobs data. We'll get reports on how many jobs were added. We'll get information on, you could see non-farm employment change. They're expecting 164,000 jobs added. If that number is, higher than that, it's going to cause some probably bullishness for the dollar in the stock market. And if it's bearish, then it would be the opposite effect. Average hourly earnings will also give us some inflation statistics insight. And then unemployment rate, which is forecasted to come down to 4.2%, will be interesting to see. Last month, if you guys remember, we had some big freakouts when we take a look at things like the dollar against the Japanese yen. The dollar against the Japanese yen last month, right around the NFP report, saw a huge slide lower, and markets got very, very volatile. Dollar yen has kind of recovered from that period, but not that much. We've seen dollar yen kind of trade sideways for the month. If we take a look at the commitment of traders data, which is probably worth us doing here, let's take a look at COT data for a moment. What we can see here is that on the Japanese yen front, they have been doing a little bit of buying back of the Japanese yen, but this has greatly changed in the last few months. There was a little bit of short covering that happened, but also some long covering as well. And so when we take a look at this, when we take a look at the where the COT report sits, the Japanese yen has gone from way over here to super, it was super bearish by institutional money, now smack dab in the middle. So I'd say it's much more neutral. So we'll keep an eye on the COT report for that. In other words, or in other news on the COT front, we saw some NASDAQ buying, we saw NZD buying, Euro buying, Aussie buying, Swiss franc, Russell, CAD, Nikkei, and gold. Also some Dow and pound, a lot of buying. And then on the flip side, a little bit of selling on things like copper and US oil. So commodities getting sold, which I find especially interesting because they sold them last week. And then sure enough, take a look, oil is crashing through the lows here, which perhaps signals a little bit of weakness on the global economic data front, because maybe people are a little bit concerned that there's going to be a lesser demand for oil and commodities like silver and copper. You can see silver also following suit and really tumbling here this morning. So we will have to keep an eye to see how much more those want to come down. But remember, a fall in commodities usually signals lowering inflation and perhaps weaker economic outlook, because again, strong economies demand more raw materials and weaker ones demand less. So if there's some expectation that the economies of the world are going to slow, perhaps commodities could weaken a little bit. That being said, I'm not particularly outright bearish on commodities at this time. I do think that, this is a justified move lower with inflation cooling, etc. But the jobs data will be very important to things like oil to signal whether or not there will be forward-looking demand for these commodities. So I'm keeping an eye on oil, but again, a huge level of support. I would not be surprised if there's some, further sliding for oil in the meantime until some sort of trigger helps us find a bottom, perhaps that trigger being a strong NFP report on Friday. We'll keep an eye on that. Last thing I want to mention as we close out today's video is that if you're somebody interested in stocks, futures, Forex, etc., we have 2 different Telegram channels that are linked down below in the description. You can keep up with our ideas there. And if you're a stock trader, we just launched a brand new stock trading Telegram channel where we're sharing all of our ideas on individual stocks like Nvidia, etc. So make sure to join those free resources if you have not already, and thanks for watching. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.